Hey everyone, wanted to jump on here and discuss some of the latest trends that we've seen in the investment world for the week of August 22nd, 2023. So first and foremost, cash is king again. So more and more investors are starting to pour money into cash equivalents. These are treasury bills, money market funds, and CDs. Because for the first time in over a decade, investors are starting to see good returns on these investments. The risk-free rate of return is currently above 5%, meaning the rate of return that you can get on a 3-month treasury bill. And this is the highest it's been in over a decade. The yield curve still remains inverted, meaning short-term interest rates are higher than the 10-year or 20-year. So investors are starting to take advantage of that trade-off between the return that they're anticipating with stocks compared to what they can get as a risk-free rate of return from treasury bills. In the month of August has not been great for stocks. The stock market, the S&P 500, was down almost 4.8% leading into this week, which has also led many investors to take that easy return, that risk-free rate of return, and put their money into treasury bills and money market funds. Also this week on Wednesday, the highly anticipated earnings report of Nvidia. And once again, Nvidia did not disappoint. Their earnings report was a positive as their earnings exceeded expectations once again. A lot of investors had anticipated that this would happen. The stock is up almost 220% year to date, and the stock opened at a record high on Thursday after these earnings reports came out. However, an interesting story started to develop in the market. It was almost as though a lot of this was already priced into these returns. The stock market indexes were started high and started on a positive note, and then throughout the day slowly started to give up some of those gains. And now, as of this recording, stock markets are actually pointing downward on Thursday. Another developing story this week was retailers are starting to take it on the chin. As many of these earnings reports have stated, so companies such as Dick's Sporting Goods, Dollar Tree, Macy's, Nordstrom, they all reported earnings this week. And we started to hear over and over about the hit on the bottom line that they're experiencing due to theft in the stores. So many of you have probably seen videos online of thieves breaking into these stores and taking whatever they can get their hands on. Well, now these retailers are finally starting to come out and say that this is having a drastic impact on their bottom line. So Dick's Sporting Goods is the most notorious example of this. Their stock was down on Monday almost 24%. The company, it missed earnings per share by almost $1, and that led to one of the worst days on records for Dick's Sporting Goods. A lot of other companies, Macy's, Nordstrom, Dollar Tree, followed suit as well, and their stock has been performing very poorly this week. So that's obviously a developing story as to how much theft is playing a factor into some of our retailers. Where do they go from here? Do they start to close some of these retail shops and start to move everything online? That's yet to be determined, so obviously a developing story. And lastly, we'll close out the week on Friday with hearing from Federal Reserve Chair Jerome Powell. So it is anticipated that in September they will announce their last and final interest rate increase. So what that will lead to is potentially them pausing interest rates after that announcement is made. However, Jerome Powell seems to be sticking to that target of 2% inflation. If he continues to hold that target of 2% inflation, that could mean they start to squeeze the economic and make the economy even tighter and tighter and more restrictive money policies. That could mean as well the continuation of rising interest rates. With retail prices and the consumer spending continuing to be up, and also things like groceries and gasoline starting to increase in price as well, could lead Federal Reserve Chairman to continue to raise those interest rates. So there's a quick recap of what's going on in the stock market. As I mentioned, we're starting to see a bit of a tactical correction with stocks giving up some of the gains that we saw earlier this year. If you are managing your portfolio, now might be a good time to take a little bit of risk off the table, maybe pick up a decent yield and decent return on treasury bills or CD rates. So reach out to me if you have any questions on that, on kind of rebalancing your portfolio, what to look for that. Happy to help out.